Welcome, everyone. Thank you for joining our long-term care presentation. We're going to give a couple minutes to get everyone in and settled, and then we'll get started. All right, thanks for joining in. We're going to talk about long-term care today. I know you're all excited and waiting patiently, so we'll give another minute or so and we'll get started.
Lots of good information to share, right, Jason?
Yes.
Invite all your friends if they're not already on the call. Send them a text and tell them to join us.
Good idea. Yeah. Share the link real quick. Great. Welcome in, everyone. We're getting our last few folks in their seats, so to speak.
On their couches in their jammies.
That's right. Maybe even slippers. I mean, you can still wear slippers this time of day. So, and if you're watching this later as a replay, you can still be in your slippers. How exciting.
Absolutely.
This technology makes it a lot easier, doesn't it? Think we'll ever go back to the days where we get dressed and go somewhere to hear this information?
Partially dressed.
Partially.
Occasionally.
Hopefully fully dressed if we go out of the house.
True.
Yes. All right, I think we can go ahead and start. So my name is Jason Harris, and I'm the Vice President of Financial Freedom Wealth Management Group and also one of the wealth advisors here. So we are going to talk today about long-term care. What is it, and do you need it? So we've got some great fun lined up, and I will just walk us through here. Okay, here's our agenda for the day or for the hour. We won't take more than an hour, okay? We're gonna do a few introductions on who we are, and then we're gonna talk all about long-term care. And you're gonna also find out more about what your options are. And this is not just about you, but also any loved ones that you have that could benefit from this information. It'll be very helpful where you can share that as well. And then next steps, what should you do next moving forward? And then we'll have some questions and answers at the end. And if you do have questions as we go, feel free to add them. We may not address them till the end unless it pertains directly to what we're covering. Okay, so I've already introduced myself, and we also have Catherine. So she is hailing from the wonderful state of Massachusetts. Say hello, Catherine.
Hi, everybody. Thanks so much. We've got people all over the country today. That's so fun. And I am definitely East Coast represent.
Yeah, love it. So great to have plenty of representation. Catherine is a certified financial planner practitioner as well, and works with many of our clients on long-term care needs, as well as just she is one of our wealth advisors as well. So many different hats that she can wear, and she's really excited to bring some of this long-term care discussion to us. So she's going to lead quite a bulk of the conversation today. So glad to have you, Catherine,
Thank you.
on our team
Good
and on this. Yeah, and we'll have a special guest that we'll introduce at the very end. We're really excited. So we will share that at that point. Okay, a little bit about who we are. If you're new to us or just kind of joining in, someone maybe sent you this link. We are Financial Freedom Wealth Management Group. We were founded 21 years ago We call it the turn of the century, the year 2000. And we are here as a firm that's committed to bring you comprehensive wealth management. And so this means we are not just diving into one little area of investments, but we're actually looking at a whole gamut and scale of things that can impact your financial life. One of those being long-term care and insurance needs are part of that. And so we're really here to serve you. As you can see, our core values here, we are guided by those. They are what drive our business and our team. We work together as a team. We're one big, I'll share with you the team here soon, but we're one big happy family. And this is how we hire people, and this is how we fire people, is based off of our values. It's that important to us that we're treating all people with respect. We are not compromising our integrity. We're delighting our clients, and we're embracing our team culture. So those are all very important. And the whole focus is to create a plan for your dreams and to inspire you towards financial freedom, which is in our name, which is great. And all of this is wrapped around our commitment. And this is what we live by day and night. When we wake up, when we're ending the day, we're thinking about our clients and caring deeply about them. So if we do nothing else, as long as we've cared deeply about you and your financial life, then we've made a big difference. So that's who we are in a nutshell. And this is a list of our services kind of summarized. We're going to focus today on some of that family wealth and legacy planning, which is where some of the long-term care pieces come in, but it affects some of these other buckets as well in terms of investment management. Tax reduction can also be part of a long-term care strategy. And you can see the other services that we provide as well. Okay, here's our team. I promised to show you our beautiful team. So we've got 17 on our team, 7 wealth advisors, plus 10 support staff to help you behind the scenes. So with that, Catherine, I'll let you dive in here to talk a little bit about long-term care. So what is it?
Awesome. Yeah, thank you so much. So as you mentioned, today we're going to be learning about what is long-term care. And if I need it, and if I would like to plan around the possibility of needing long-term care support, how much does long-term care actually cost? And then what are my options if I'd like to figure out the best way to work that into my financial plan? So just to start with a news flash, right? We are getting old as a country. 10,000 baby boomers are turning 65 every day, which is going to be happening until approximately 2030. That means one of us every 11 seconds, right? So what does that actually mean, and why does that matter? Most of us are going to need, there we go, some sort of long-term care support at some point in our lives. So almost 70% of us are going to need care. With the aging of America, we have to pay attention to how we're going to be providing some support. And if you turn to the next slide, this is something that I'm passionate about, is that within that dynamic of, most of us are going to need support. Actually, it's more women than men are going to need long-term care support. So that's very important. If you're in a couple, if you're in a single woman, type of scenario, which Gina is going to talk about a little bit later, it's something really to pay a lot of attention to in terms of the statistics. So I'm going to turn it back to Jason, who's going to tell us a little bit more about actually what is long-term care. We were going to explain that to you.
Yeah, yeah, absolutely. This is, thank you for bringing some of those details of behind the scenes. Sometimes we don't know of all of the importance of why we're actually even looking at long-term care, but to know that there's a big impact in people's lives, it's important to cover that. And then more along those lines is really, what does it mean? It's really when you have 2 out of these 6 activities of daily living, they're called ADLs, that you or a loved one cannot do. Now, these kind of get intense as we go down the list, but bathing is one of them. Dressing yourself, eating, these are all good ones. Continence, that's a tough one, but it does happen. That's a very nice way of saying something that we don't want to say. Not being able to control yourself. Toileting, and then also transferring. So those are the 6. If there's 2 of those 6 that you or your loved one cannot do, then you do have a long-term care need. And then where is care provided? There are, most people think of long-term care, nursing home. Number one thing that comes to your mind, right? It comes to my mind too, probably for all of us. But there are multiple levels and ways that care is provided. So one of them is home care. So you can even have caregivers, like even family or friends that come by to assist with home stuff. A nurse may come by, or aides, therapists, just kind of basic homemaker services for things that you can't do on your own. So it's not necessarily the full extent of a nursing home situation. Adult daycare is another example there. Assisted living. So this can be on-site help where you're not fully needing all the services, but you've got the on-site help and coordination to help you with things you can't manage, or coordination that you need to make. Of course, nursing homes are there, and then memory care facilities. So, as you get needing more care, or, sometimes people need greater supervision, like 24 hours a day, just having someone available, that's when those things might come into play. All right, so Catherine, I'll let you talk a little bit about the costs there.
Thank you so much, Jason. Right. So we have what is long-term care, right? If you need help with at least two of those activities of daily living. Now let's talk a little bit about what does this cost us, right? So this slide is basically taking average statistics. So the median monthly mortgage payment in 2011, and these numbers I'm sure have been inflated since then, $1,000. This is in the US, $1,000 per month. The median average cost of owning a used car, right? So this is a low budget, is $359 a month. And then the US Department of Agriculture gives us statistics on cost to feed your family. And so for families, a 2-person family, so we're talking about, empty nesters, 2-person family, costs on average, and this is a medium level food budget. This isn't low end or high end, about $565. So at the very bottom, we really need at least $2,000 a month to cover our basic expenses at the bare minimum. Now, what happens if we actually need care, right? So as Jason mentioned, I really like people to think of long-term care. This is not about how do I pay for a nursing home. This is how do I stay at home as long as possible, if that's your desire. Sometimes people want to go off to some facilities, but how do I stay at home, right? That's where people feel comfortable. So if we start a very bare minimum, I need 4 hours of care per day, 5 days per week. We can see the monthly cost. It varies across the country. In Oregon, $2,200, in Massachusetts, $2,300, et cetera. So just starting with the very bare minimum, we're adding another at least $2,000 to our budget, just for the very basics. Now, on the next slide, we'll see national average annual cost. Now, this is for a facility. And what we see is that, and Dina we'll introduce her a little bit more later, but we talk about when you actually need to transition from home healthcare to a facility, this costs on average $100,000 a year, really, for across the country. We have some states that it's a little bit lower. Utah, we're a little bit closer to 90. Massachusetts, we're much higher. New York, California, but at a bare minimum, in order to live in a facility, we need to count at least another $100,000 a year. So Scary statistics. Now I'm going to turn it back to Jason, who's going to talk a little bit more about some of the myths versus reality in this area.
Yes, these are some common myths that not only have we heard, but that people say. So the first one is that it's not going to happen to me. I'm going to be fine. I'll be able to make it through, no problem. And as Catherine had even mentioned before, 70% of people do need some sort of care over their lifetime. That doesn't mean you're, bedridden for the rest of your life, but some sort of a need is likely to come into play. And then the second one is that that's what my savings are for. And even from looking at the numbers, that cost can be pretty substantial and can erode the savings that you built. So there is an actual need there, especially when you start looking at some of these costs here. So anyway, you will be spending your money two to three times faster than you normally would, is kind of what we're showing here. The other common myth is that Medicare and Medicaid have me covered. That's all I need. Well, first of all, Medicare doesn't cover the costs. They'll cover up to 100 days in a skilled nursing facility. And then, of course, Medicaid, you have to have limited assets. So you pretty much have to have drained everything to be able to use the Medicaid option there. And then the fourth one is that, yeah, my family's going to take care of me. I'll be fine. Totally good. Yeah, the difference there, though, is that, usually there's a lot more pressure that's placed on families, and it causes worse things, especially for the lady is taking care of someone. And so basically there's lots more depression and things that can happen inside the family. So it kind of actually disrupts your family instead of actually being a great place for care to happen. So those are some realities. Then the other piece we have is, how are you going to pay for this care? So you could use the assets that you have. We've kind of talked a little bit about that. Family can help out. Insurance is an option. And then, of course, there's the hope and pray notion there, which could work on some level, but you definitely don't want to just depend on any of these pieces. So let's talk a little bit more in detail about these options. Back to you, Catherine.
Thank you. So as Jason was saying, right, what are our options? And self-insuring is certainly one of them. We're going to expand upon that in the next slide. We also have pure long-term care insurance, which is another great option. And then there is a product called hybrid long-term care insurance. So I'm going to explain all three of them and give you the pros and cons, all three. So let's turn to self-insuring, right? As I mentioned, if we self-insure, very often, Jason and I, in our holistic wealth management, working with our clients, self-insurance is equated to like, I really don't have a plan. It's going to give you flexibility. You can do what you want with your money, right? But we hope we're going to be prepared for the potential expense, which we heard is when we need that facility, $100,000 a year potentially. Unfortunately, a lot of people choose this option by default. And when we turn to the next slide, we're going to go through an example. So Jason and I hear a lot from our clients. I got $1 million. I'm great. I look great. My wife and we're going to have a great time in retirement. So what this is showing us is a couple at age 65. We've got $1 million. We're earning 5% on our money. And we are going to be taking $50,000 a year to live on. And that's going to be adjusted for inflation, 3% a year. Well, and if that is all that happens, we have no long-term care need, that's great. Our funds will last us until approximately into our 90s, right? So that's great. However, if one of us needs some support, and in this illustration, we're showing 5 years of long-term care support, and this is happening early on in our retirement, ages 65 to 69. We haven't even shown the full value. We're just starting with some like home healthcare aids, adding an additional cost. But as you can see, our best laid plans with our self-insurance are really kind of thrown out the window, because now we're running out of assets into our 80s. And then what we see at that point is now we're back to family, right? Like, who can help us? So yeah, so self-insurance isn't always necessarily the best way to go. So let's turn to some of our other options. So long-term care insurance. So this is pure long-term care insurance. We are paying every year a premium. And we are offlaying our risk of a long-term care event to the insurance company. So every year we pay a premium. We're going to protect our assets. Cool thing about long-term care benefits is when they are paid, they actually come out tax-free. Jason was alluding to our tax planning earlier. This is a great benefit. Concierge care, I'm going to talk about a little bit more at length, but this is a huge benefit in no matter what we choose for long-term care insurance. And providing insurance really allows us to preserve our independence, dignity, and standard of living. I will use something that I learned from Dina, and she will probably say a little bit later. But you know, when you think about those activities of daily living, right? If I am a grandma and I'm in my 80s, right, I would prefer my kids to be able to come, you know, sit on the couch and have a cup of tea with me, versus having them have to come and actually help me transfer from my, you know, bed to the kitchen table, etc. So, you know, I'm a pretty tough woman and I like to do things on my own, and that's just the way I want things to be. The cons, of course, are we have to pay for it, right? We need to make sure we include this in our budget, and that's something that Jason and I work with our clients on to make sure we do actually have the funds for that. It is use it or lose it. The pure insurance is really, you know, if we don't need it, we're not going to get anything back from that. That's okay. And it can be complex, right? When we start going through some insurance cases, it can be complex to understand the intricacies of the particular policies. On the next slide, we're going to turn to our third option, which is hybrid long-term care. So in these policies, we are combining a life insurance policy, sometimes an annuity, mostly life insurance policies, with a long-term care part of the insurance coverage as well. So we're eliminating completely that use it or lose it, right? Either we're going to be able to access that long-term care benefit, or our beneficiaries are going to receive a death benefit when we pass. There are flexible premium payment options. We can structure them in what we call single pays. You pay once. 10 pays, you're going to pay over 10 years, 20 years. There's all kinds of flexibility in there. And the neat thing is, if we do pay over single or 10 years, then we're done and we've avoided any potential premium increases. The cons of these type of policies, right? We need the budget. We need to budget for these. So, and they can be complex to understand. And then the other thing is, because we are putting both of these pieces together, both life insurance and long-term care insurance, you don't get the best of both. So we're combining it into one product, but you give up a little bit on either side. So that is the hybrid long-term care policy. Now, the one thing I want to mention, and this occurs for all of our policies, Jason, on the next slide, is the concierge care coordination. So I always like to tell my clients, in financial planning, we have kind of the black and white of the numbers, right? Like, what is our income and assets? What do they look like? Can we afford the insurance premium? Is that going to leverage up our assets for the care when we need it, the cost of care? But we also have the qualitative piece of why long-term care is so important. And each of our insurance providers, and we're product agnostic, we work with all of them, will provide something along the lines, it depends on what they call it, but concierge care. And what this does is that when there is a long-term care event, or even a pending, your dad or mom is getting slower, now we have access to a team of resources. So they are going to help us find the right care. They're going to explain what all of this means to us. They're going to help us file for the benefits. And they really give us that time back. I mean, as Jason was saying, right, this can be such a hardship on a family, and we've all seen it. I'm guessing, almost everybody on this call has seen some sort of family or extended family or friends or neighbors have seen through some tough events where loved ones need some care, and the stress, either financially or emotionally, that puts on our loved ones is tough. When choosing a long-term care policy, there's a lot of different pieces that we think about, right? What are the features we want? What types of care is typically covered? The benefit period, so both the amount, the dollar amount, and how long those benefits are available to us. Do we need to wait a certain amount for those funds? Is the policy renewable? Do we have any worry that it's going to lapse on us? What type of inflation is involved? Are we going to cover, right? We know healthcare inflation is can tend to be higher than the general average inflation. And then what happens if we go out on claim? Do we still need to pay our premium? So there's a lot that goes into choosing a long-term care policy. And that is why we work with the specialists. So I'm going to introduce Dina. So Dina is like an extended teammate, right? Jason and I work with our clients. We know your financial resources and your long-term financial goals. And then we come together and we work with our teammate, and Dina is the expert in each long-term care policy. She's going to introduce herself and then go through some sample clients. They're made up, but they're very typical of our client base and the types of cases that we come up against every day. So thanks so much, Dina.
Thank you, Catherine and Jason. I'm so excited to be here. You know, I love this space of life insurance and long-term care. And, you know, coming off of the year that we just had, protection and planning are just so huge. We've had so much conversation about dying too soon and then also living too long. So my name is Dina Mabry and I'm with BGA Insurance. It means Brokerage General Agency. And basically what that means is just I do life insurance and long-term care, and I have all the carriers and all the products. So I partner with Catherine and Jason and the team over at Financial Freedom Wealth Management Group, and we take each client and look at what their individual needs are as far as money and budget, and then of course health. And so what I want to do is just talk to you about 3 different segments of the population. So our first segment is our couple, our married couple, and this is Herbert and Sunshine. And I don't know where we came up with those names, but they just kind of look like a Herbert and a Sunshine to me. So Herbert and Sunshine are very active and they're living off of their retirement savings. They're already retired and they're riding their bikes and they're living their life, but they've sort of procrastinated when it comes to thinking about long-term care. And I kind of make fun of the Herberts because when I'm in client meetings and I'm talking to clients, the Herberts are the ones that kind of put their arms like this and say, it's not going to happen to me. And I always say, hold on, Herbert, it's going to happen to somebody, and it might not be you, but it may happen to Sunshine. And we need to make sure that both of you are protected, because the worst thing that can happen is if Herbert gets very sick and maybe he has Alzheimer's or Parkinson's or something that will last a long time, he could spend all of their assets on his care and then leave Sunshine on her bike saying, wait a minute, who's going to take care of me? So, but the good news is they did procrastinate, but they're not out of luck yet. So I'm going to say they're in their mid to late 60s. Most carriers in the long-term care arena will go up to age 75. Some will go as high as 79. Now, of course, you need to be underwritten. So you have your health, not the health of a 20-year-old, but you still need to be healthy. There's the hybrids, there's the traditionals, as Catherine talked about, and then there's some annuities. The hybrids are great, and there's many different forms of the hybrid that we can explore when we meet. And the different hybrids are long-term care riders or chronic or critical illness riders, and they're either life insurance or they're more geared toward long-term care. So different buckets of money depending on your age and your insurability. So don't despair for Herbert and Sunshine. We can still help them. Our next client is a married couple, and this is my demographics. This is kind of near and dear to my heart, but this is really the sweet spot for long-term care planning. So let's say this married couple is anywhere between ages 45 to 55. So I'm 52, and when I was 50, my husband and I purchased a hybrid long-term care policy, and we will pay for 10 years. So by the time I'm 60, my husband and I will have a paid up long-term care policy, which means that we're going to have big buckets of money that will be tax-free for us to take care of ourselves. And like, Catherine and I have these discussions all the time. She's on the East Coast and I'm on the West Coast. And so we tend to talk a little bit later in the day or earlier in the morning. And we always talk about what we want as women and as mothers. And we say, we don't want our kids doing that heavy lifting. We don't want our kids coming over and having to bathe us and dress us and maybe have to take a break from their careers or really put a burden on them and their families. So what a long-term care policy is going to do for us is allow our kids to come over and watch Netflix with us. They're not going to have to do the heavy lifting. And that's peace of mind and protection. So again, it goes back to, even if you have kids in college and you feel like you don't have the money to allocate to a long-term care plan, there are definitely options out there that are affordable. And I always say something's better than nothing. So even if you can't afford the best of the best of the best policy, at least something is better than nothing when you look at care. And of course, the crystal ball doesn't work ever. At least for me, it doesn't. How long am I going to need care? How many years? How much is it going to cost? What's my ailment going to be? Do I want to go to a home? Do I want to stay home? It's just too hard to plan that far out with so many different circumstances. But with these policies, they are very liberal as to what you can use them for and how you can use them. All right. And then our third case study is the younger professional or the single. And in the last year, this has been the biggest growth in my practice that I've seen. And a lot of young women professionals, attorneys, doctors, just women in the tech industry, coming forward saying, well, wait a minute, I've already maxed out my 401k. I'm making great money. Why don't I reposition some of my assets and look at doing either a 5 pay or a 10 pay or maybe a 20 pay of premium, and then paying up a long-term care plan for myself so later on I know it's there for me. Some of these people are single, some of them are married, we're balancing careers and families. But I think this is what my takeaway of all three of these case studies is you've got to have a plan and you've got to have a conversation. You need to plan and protect and just have the conversation to know what's out there. There's so much out there in the market, and these carriers are evolving. Back when I first started in insurance in 2007, we really only had traditional long-term care. And I'm sure some of you on the phone have heard of your friends or colleagues or family members that maybe bought a traditional long-term care policy years ago, and they're seeing significant rate increases now. And that was pretty much because the carriers didn't know how to price the product back then. They were thinking that people weren't going to use it as much as they have. It wasn't going to be as valuable as it is. So now they've made these changes, and we've really had a learning curve. And especially because now we can have the long-term care with the life insurance. And that's really a peace of mind combination. So I'll turn it back over and see if we have any questions or if we can.
Thank you. Thank you. I'm just going to summarize some of our points, right? So, a lot of us say it's not going to happen to us. Well, the reality is it probably will. If we take certainly a couple and obviously singles, like there's a very good chance that we will need some sort of long-term care support in our future. Medicaid and Medicare are not the solution. There's not enough funds. And as Jason mentioned, for Medicaid, I mean, you're really spending down your assets to almost nothing. So that's not ideal for most of our clients. Paying for long-term care, as we see out of savings, is really very often equivalent to not having a plan, right? And I don't want, I really believe that my clients are working, our clients at Financial Freedom are working so hard to earn their living, to provide for their family. And I really do believe that you deserve the right type of care when you finally need it. And without putting that burden on your family, right? Relying on your family members is a lot of stress. Something that Dina said struck a chord. I work with a lot of women in my practice, and we tend to miss out on a lot of years investing and saving, certainly in retirement assets, because very often we've taken time off to raise our kids. And then sometimes on the back end, now we're taking time off. I've met countless women who have had to take a step back from their own career when they really should be in peak earning years to care for their family. So you really do want to think about, you want to put your family in that situation, or would you like to plan around it and protect? That's where Jason and I come in. We work with each of our clients on their particular situation. We bring in Dina, the expert who knows all the products, and we present you with your options, right? Ultimately, you're the one that has to make the decision. We just want to educate you and make sure you're comfortable with your own situation. So thank you for joining us. With that, I'm going to hand it back to Jason and bring it home.
Yeah, thank you so much, Dina. Thanks for illuminating some of these actual case studies that we can look at that are helpful, and Catherine for your contribution here. You know, the one thing I think what it's really boiling down to, Catherine, as you've been sharing, is that you want to protect your assets, the things you've worked hard for, protect your family, but then also that you have options. Like it's not just, oh, whatever shall be, but you actually have options that could greatly help you and impact your financial future long term. So I'm so glad that, you know, Catherine, this is her expertise. So she works with Dina quite a bit, and we do want to, oh yeah, here we go. Next steps here. Let me show you this one. And by the way, we will get to your questions right after this. So yeah, next steps, it's really coming up with what is your long-term care plan? Or if you're thinking about loved ones that you have, let's start that conversation. So you can do that very easily by texting LTC, the letters LTC. Now you got to spell it right for this to work. So if you don't get an email back or a text back, then it's, you know, just try it again. So yeah, text LTC to 458-777-4458, and you'll be able to schedule a complimentary consultation. So whether you're a current client or new to us, we'd be glad to offer this long-term care consultation specific to that. So make sure there'll be a link to hop onto our calendar. You'll be on Catherine's calendar, and put in long-term care or LTC in the notes so that we can make sure to have everything prepared for you. And also, if you're working with one of our other advisors, we'll make sure they're informed and up to date as well. So this is a great next place to start, is figuring out what do you need to dial in, what's going to make the most sense. We're not pushing sales products and all those sorts of things. We're pushing to make sure you're taken care of both now and in your future. Wouldn't it be nice when you're sitting in your rocking chair at 90 years old on the porch and having the tea, that no one's transferring you, but that you feel secure and confident knowing that you've been taken care of. So that's what we really want for you long term. So as we're answering some questions here, I will show some slides just real quick. LPL Financial is our broker dealer, and so there's more information here about who they are, but they're the largest independent broker dealer in the nation. And the beauty about LPL is that they don't have any proprietary products. If you've never heard of them, it's okay, because they're not out marketing themselves. We get to care for you, which they're kind of backing us up, which is a great thing. And so that's where our registrations are held, and there's plenty of insurance to protect everyone involved. And then here's some disclosures while we answer a few of these questions.
Jason, I forgot to add something, if you don't mind, before we jump into the question.
Go for it.
So, because Dina brought up sort of what she did for her personal situation. So I'll just explain. Now, obviously, I work in the industry, so I'm familiar and I've known about this for quite some time. But I actually also own a long-term care policy, and I bought it probably 5 or 6 years ago. It was a traditional long-term care policy, and it was a 10-pay, right? And I actually got into it before my kids. I was going to get ready to start paying for college. I have 4 daughters, and we're paying for college for all 4. And my thought process was, I want to get into this now before I get into college, because I know when those college bills start hitting, I'm not going to be in the bandwidth. Now that I am almost, well, 5 or 6 years into my 10 pay, I am not letting that go, right? That would be throwing that money away. And then the other thing is, when you're thinking about buying long-term care insurance, on the younger side of things versus in your mid 60s or even up to 70, you don't always have a full picture of what you're going to look like, right? You're still earning and growing your assets. And, so I started with the policy that worked well for my budget. I think fast forward, there's a very good possibility that I'll layer something else on, right? I will add to it. So I bought something. To me, what I really, really wanted was that concierge care. I wanted to know that my girls, I have 4 daughters, that they would, and of course, daughters, right? We always think the daughters are going to take care of their parents, but I want them to know that they would be in the position of care supervising versus caregiving. So I'm passionate about this topic. As Jason said, we can find the right solution for all of us, depending on our particular situation. So just wanted to make sure I shared that with you, everybody.
Yeah, thank you. Yeah, and feel free to add some more questions into the Q&A section here. We've got a good one. I'd like to hear more about costs based on age. For that, well, you guys can address that if you want to, but it may be more specific to you. But a certain financial guru says that you should purchase long-term care insurance once you reach age 60, but not before. Why is that?
Dina, I'm going to let you grab that one.
I was going to say, let me jump in on that. I was going to say in 2007, when I first got into this business, everybody really had that mindset of don't start shopping for long-term care till 60 or 65. But there's 2 problems with that. One is insurability, because unfortunately, the older we get, the more medical problems we have. And then the second problem really is the leverage. With the hybrid products, the life insurance and the long-term care combination products, you're really leveraging dollars. And the younger you are, the less expensive it is. So you can get away with spending less if you start, let's say, at 45 or 50 or 55 versus if you're in your 60s. So it is about leverage. And then the second part of the question is that Michael's mom looked at long-term care when she was 70. And it can be very costly at 70. And I don't know her health conditions, but of course, if she wasn't in perfect health, they would charge a surcharge because of her health concerns. I worked with a 72-year-old recently, however, and she had sold her home. She was a widow, and she did a repositioning with a lump sum of money, meaning she repositioned money from her home sale and put it into a policy and doesn't have to pay any further premiums. It was $120,000. And she put that into the policy, no further premiums, but it gave her so much leverage for when she's in her 80s, 85, into her 90s of long-term care benefits that it made sense. But then the best part of the policy is if she doesn't use the long-term care, let's say that she just dies peacefully in her sleep when she's 100, then all of her premium will be returned to her family in the form of life insurance. So it's kind of a repositioning, and then it's going to sit there and grow. It's going to have inflation on the policy, but then she doesn't have to pay any further premiums. So there are different options out there.
That's great, Dina. And that probably ties into another question that we had about premiums skyrocketing after they had bought the policy 20 years ago. It's a great policy. Should we shop prices at our current age? They're in their 70s.
I'm happy to look at that. I just was talking to a lady the other day, and she bought her policy when she was 54, and now she's 70, and her premiums are going up, but unfortunately she's uninsurable at this time. So what the carrier was giving her was some different options where she could give up some benefits or give up some inflation to keep her premiums down. So I'm happy to look at that. Catherine and I can look at what the carrier has sent you.
And
Great.
if I may just add one more quick thing in here, Jason and Dina. So right, if we buy pure long-term care insurance or we're paying our premiums every year, right, we do have the risk that premiums will go up. I have been through many cases where we do exactly what Dina said. We're going to look at, okay, does it make sense to pay the increasing premium? Or they usually give you options. We can keep your premium the same, but we're going to reduce the inflation piece, et cetera. So we look at those options when you have it. And then the other thing that is kind of unknown or just not spoken about So, let's say you're an older couple, you took your long-term care insurance, and now, your budget is getting tight, or the premiums went up and you just don't have that extra $500 or $2,000 a year. I can almost, we can never guarantee, Jason's going to yell at me, but I can almost guarantee if you go back to, family members and say, listen, I risk, letting this insurance lap, that's when the kids come in. And that's when we say, listen, this is well worth your money to keep that premium in force for your parents, because you're going to protect a whole lot more on that initial, financial plan scenario of your parents. So we have some strategies, and if it ever, comes up to you or your parents, just reach out to us and we can do the reviews and give you the information that you can make your decisions with.
Can I answer Teresa live?
Yeah, please do.
So Teresa, that's very interesting. And I would say no, because here's the problem with
Dina, let me share the question with everyone.
Okay, go ahead.
A well-known financial expert states not to get into a hybrid product, but standalone long-term care product at age 60.
Okay, so if you're age 60 and you buy a standalone, just traditional long-term care right now, chances are you're going to be paying premiums for 25 years. If you're not going to go on claim until you're 85 years old. And then if you do pass away without using that product, that traditional long-term care, you don't get any benefits back. And then also the traditional, you are on the hook with a lot of carriers to having rate increases. So that's a big exposure that you're exposing yourself to out there. One, you don't know when you're going on claim, and you can't have waiver of premium until you go on claim. So if you're 85 or 90, that's a long time to be paying premiums. And then two, the possibility of a rate increase. So I'd rather look at something maybe on a 10 pay where the premiums are done being paid when you're 70.
Yeah. And I'll add to it too. And I see Catherine, you want to also, but looking at these hybrid policies, they're much better. I mean, it's kind of a newer thing, as Dina was kind of alluding to. The industry keeps changing, but by you putting away a certain chunk of money, or paying into putting away that certain chunk of money, that money is going to have more accessibility dollars wise for you down the road. Let's just do, if you needed it, let's just say, you put in $100,000 into this thing. Some of these policies will turn into $300,000 or more of actual coverage that you could use if you had a long-term care incident where you needed it. So the stretching power of your dollar at work, if you needed it, really does help. But yeah, I think some of the reality is you may not need it before age 60, which is why someone would state that. But the reality, like Dina's saying, is that you are most likely to need something. And so to protect yourself that way, if you've got that ability.
And if I could just add one other thing. Again, this is the traditional standalone long-term policies can work. They absolutely can work depending on your particular case. But sometimes what makes me nervous is that my clients might be 80, 85, and they're paying the premium. And if they don't have someone kind of following up on their bills or kind of helping them out, maybe they travel, like everybody's young now and everybody can't wait to go travel. Maybe they're traveling, they spent 6 months in Australia and that bill came, they weren't paying attention, and then the policy lapsed. So that always makes me a little bit nervous to continue to pay on that single premium, or the premiums each year. And when you're not going to need it till you're in your 80s or 90s, and if you do take it, I always recommend we can appoint another, I don't know what you call it, Dina, but someone else who will just get the notice that let's make sure the premium gets paid. We can auto pay it, et cetera. But that is something that always makes me a little bit concerned with my older clients still paying the premiums.
Yeah, most carriers are requiring that now because they realize, especially with the risk of Alzheimer's when clients get older.
Good.
Should I address the anonymous attendee?
Let's do this one first. If you have a cancer diagnosis, are you completely out of the loop? Like, do you have any options?
You do have options, not necessarily. What we like to do, with the team at Financial Freedom Wealth Management Group and myself is look at the pre-qualification first. So we won't put you through giving any blood or doing an exam or doing all the crazy stuff first. Let's just get the basic information, medicine, diagnosis, pathology information, and then we can get you an answer real quick.
Great. And yeah, let's do this one. For a couple, are 2 policies recommended, or is there a hybrid where one policy can be purchased and used for whoever may need it and play the odds that it won't happen to them both? Great question.
That's a great question. This is my favorite product, and it's the one that I purchased, and it's a joint product where my husband and I are on there together. So we each have our own buckets for long-term care, but we share the life insurance. So if we both get hit by a bus and pass away without using the long-term care, it will return our premium to our children. But why we did it is the long-term care benefits, and we each have our own buckets.
That's great. All right, are there any other questions out there? I think we got all of these. Dina, did you want to address just briefly the state of Washington having that long-term care tax coming up starting next year?
Yes.
Thank you for remembering that.
Yeah, that's great. I saw that question too. So the state of Washington is doing a tax, and it's going to be a payroll tax that the employer is going to be required to take out of people's pay stubs. And my understanding is it's only 0.58%. So on a $100,000 income, it's about $580 a year. The problem that I'm seeing, and I don't live in Washington State, but I do work with clients there. The problem I'm seeing is that you have to be a Washington resident when you take the benefits. So you could potentially pay in for 20, 30 years. And then if you choose to move out of Washington, you don't get any benefits. The other problem is that it's only a 12-month plan, and the total bucket of your long-term care benefits are about $36,000. Well, we all know that that's not going to be enough. And if you have a debilitating or catastrophic problem like Alzheimer's or Parkinson's, where you're on claim a long time, it's really not going to help. So what we are recommending is let's look at it. Let's look at what the options are available, and you can opt out of that payroll tax and get your own private policy.
Dina, I would just add, I'm glad we talked about this because this is really important. And I actually think if you are living in Washington State or have friends or family, I would jump on considering a private. We have a limited time to be able to opt out of that tax. Otherwise, you're in forever. And so at least let's have the conversation to see if it's something that makes sense for you. And if you have a private policy, then we consider opting out. You may decide it's not right for you, but I think it's the important time to just have the conversation. So if you are from Washington watching this live or replay, make sure you reach out to us so we can do a review for you.
Yes. And then someone asked, what is your experience financial planning and long-term care planning for federal employees who use or who have a thrift savings plan?
I can take that. And I don't know, maybe Dina, you can add to it. So they actually have some pretty decent long-term care insurance options available to them. And we look at both. We look at both through the federal plan, and then we look privately and we evaluate. I mean, very often, for example, people come to us with their life insurance from their company. And I always say, all right, hold on, before you add on additional, let's look privately. We will give you the information, you will make your decision, but let us at least look. So it's always worth having the conversation to take a look, no matter where you are, whether you're working with the government or privately. We'll compare and give you information.
Great. Okay, I think we captured all the questions, unless there's any more that pop in. But you know, Dina, I'm so glad that we have you at just an arm's length from our team, that we get to utilize all of your resources. And the beauty about you is that you're networked all throughout the nation, just like we are. So you can serve any of our clients, which is great. And so thank you for being here today with us.
Thank you for having me. I just love the holistic approach that Financial Freedom Wealth Management Group takes on too. So I love jumping in and talking all about the life and the long-term care. So thank you for allowing me to do that.
Absolutely. Yeah, so again, if you have any other questions or if you want to dive into your personal scenario, which is always the best one to look at, just text LTC, or you can even call that number that gets straight to our office, and we'll make sure that you have the time on our calendar to walk through where you're at and how we can help you along, no matter your scenario. So thank you all for joining, and have a great rest of your day or evening.
Thank you.
Thank you.